typical Gentian update, what's new with the team, the firm, the building, questions we're hearing from you and the rest of the client base, update on the markets, and also a discussion of market corrections. We know one's coming, we don't know when. And then planning opportunities, and of course, the popular topic of today, tax updates.
Good morning, everyone. So for those of you who don't know me, I'm Mike. I am a financial planning associate at Gentian, and I do some of the behind-the-scenes planning and portfolio management. So just going to help Peter out. Thank you for handing over some of your coveted opening intro for the forum. And yeah, I'm the one who you were looking forward to listening to, but didn't know was actually going to be speaking. So the most important date on this list, October 5th, which is today. And I know I speak on behalf of everyone here that we are so grateful that you were able to make it today. We are so grateful that we're able to put on this presentation and just see everybody. I am exhausted with Zooming, and so this is so much better, and really looking forward to everything that we have for you today. Our next bi-weekly update will be October 13th. How many of you have seen our bi-weekly updates? Great. Awesome. No, we really appreciate that. We put a lot of effort into those each week when we put them together. And the week that we put them on, it's just a great opportunity for us to connect with you, talk about the markets, talk about some planning practices that you see, and you might see a little bit more of me on those going forward. So if you needed more motivation to log in and check those out, there you have it. The next Ladies and Gentian event will be October 20th. This will be a time map, so it'll be some self-realization that will be found, and you will see a special guest that is not me, Zach DeBoer. So Zach will jump on and present and talk to all of you for anyone who can make it, and that is October 20th. Our next Health and Wealth Forum is October 28th. This is our forum that we do with our health expert on retainer, who is Michelle Norris. And on retainer means that she is somebody who we provide to you that you can text at any time if you have any sort of health questions, diet questions. That is her specialty, and that is something that we provide to you. So any of you who did not know that and are more interested in that service, please let us know, and we can provide you her phone number to text her. But she will be presenting on October 28th for our next Health and Wealth Forum. And as always, we want to direct you to our Gentian YouTube so that you can redigest some of this information after the fact. If you haven't had enough of us today, you can absolutely log in, see any of the material that we put out, and pull away whatever you are looking to hear from us. Next up, we're going to talk about some QR codes. So on top of the table, and if anybody knows what these are actually called, the table toppers, there's a QR code which is going to have a survey for everyone. And if you could take your phone out and scan that after the forum today.
All you have to do, there you go. Go ahead, Mike.
Yeah, so after the forum today, you can scan it, and it'll pull up the survey, and then you can give us some feedback and let us know how we can improve, and we take that all very seriously and would really appreciate it if everybody took the time to do so.
And make sure you give Mike and I a high rating, too.
Absolutely.
Awards and recognition. So you guys see this a lot in our email signatures, mailers that go out, and a lot of it will have Chris's name in front of it, right? It'll say Chris Doty. He'll be the first person to tell you that anything that's on this list is thanks to you, the clients, for the trust that you put in us, excuse me, and the hard work of our entire team, which, as you may notice, from the last time they were here 615 days ago, is now 12 people instead of 9. So we're growing, which is a very, very exciting thing. But recently, Chris has been named to the Barron's Top 1,200 Financial Advisors list for 2020. And I'll correct myself, not Chris. You, the clients, the team, everyone at Gentian. Financial Times 400 Top Financial Advisors in both 2019 and 2020. Forbes Best In-State Wealth Advisors in Wisconsin for the 3rd year in a row in 2020. And then he is a member of the Raymond James Chairman's Council for, I think this is year 4 or 5 now, which means the firm is in the top 4% of all financial advisors at Raymond James across the country. So please join me in giving yourselves a round of applause for all these awards.
Along with the awards and recognition for you, we invest back in you as well. And these are things that programs that we attend, things that we do on a regular basis in order to bring you the best knowledge, the most up-to-date financial planning practice, and to be the best advisors that we can be for you. In fact, later this week, we are attending 2 programs. Zach and I, actually tomorrow, will be going to Dallas to attend APFA. And that's going to be a program where we get some of the updated ideas and financial planning practices to bring back to our meetings, and then we'll share those with the team. As well as Chris has a Nick Murray virtual conference that he will be attending for the Thursday and Friday this week.
Yep. And then later in the month, Chris and Ken will both participating in the Ed Slott conference, which is twice a year. Ed Slott's the foremost advisor for IRA and retirement account planning, so we always get very good tidbits about distributions from that. So there's a lot of exciting stuff going on. I think the most important thing to also know is, Chris and Ken and Zach do a lot of continuing education, but we make sure the entire team does as well, that we're making sure that all 12 of us are continuing to grow our knowledge base so we continue to better serve you. As many of you have probably been to the new building that was completed at the end of 2019. I know it was right before we had to shut down, unfortunately, so some of you maybe haven't been there. But it's been a really great, warm, and inviting space for us to go to every day, and hopefully for you to come and enjoy your meetings and just have a chat with us. It's exciting to see that, just beginning of 2019, so let's say like 1,000 days ago, I was standing up here and just showing you renderings of the possibilities of that building. To now be able to see what it's really become is very exciting for us. And just quickly before I welcome Chris, Ken, and Zach, in case you see Ken walking a little slowly today, he and Zach did just complete the Lakefront Marathon on Sunday, so if we could all give them a round of applause. Now, please join us in welcoming Chris, Ken, and Zach.
Thank you. The long version of the video, which is about 75 minutes, is on the web, in case you want to watch that. It's just me speaking more. There's no new information. So I want to welcome you all. Like Peter had said, it's been about 600 days since we've done this live. So many of you look a little bit different. There's less of some of you, which I noticed many of you have gone on keto diets. One of my great clients, though, the other day said, Chris, this year my goal was to lose 10 pounds. I've only got 14 to go. I appreciated that more than she could consider. We were walking down the street and like, that is really funny. And now I share it with you. So what's interesting about everything that you've seen up there is also the team, the building have grown, and why do we do it? You're sitting here and this is why. It's for your experience. We continue to invest in ourselves so we can get better for you when you need us. So you'll see that with what's going on in our overall picture, but more importantly, our team, who I want to really bring up to the front in just a moment. But before we do that, you know myself, I want to go big. So why don't we take a minute right now, literally a minute, and take your pen out, please, and let's take a moment to write down anything that you're grateful for over the past 619 days. Just another 25 minutes of this and we'll be good. So who here would like to share what they're grateful for? Oh, I will. I'm grateful for you here today. Autumn, family, poetry, markets, corrections, manias, biases, families. I can keep going on and on and on. I'm grateful for a lot. I just want to make sure that you understand that. It's been a while. So I shared the last 14 programs that we would have had. I shared one from every one of those. That's what I wanted to do. Who here would like to share? Yes, Bob.
I have health, family, and freedom.
Health, family, and freedom. And for that, if you don't remember because it's been a long time, I'm going to ruin his health with 100 grand, which of course you can tell people. I got 100 grand today from my advisor. Can he have the cash instead is the question. One moment, let me see, Vanna, what are the rules here? Oh, sorry, the rules were, that's our cash prize. Great, thank you for sharing. That's awesome. Anyone else? Who next? Chris? Yes, please, absolutely.
My wife Tracy, my new family member, granddaughter, Adeline.
Very nice.
Awesome.
The health of my family, we've had some who battled COVID and have survived.
Excellent.
And just the Gentian family members, very thankful for all of
Well,
them.
thank you very much, Trey. I totally
very
appreciate that. We appreciate you as well. And for that, Zach is going to give you $100,000 because I'm running low. I'm running low. Thank you very much. I appreciate that. Anyone else? Please, absolutely. Awesome.
And my brother's really grateful for the chocolate chip cookie.
So, wait a minute here. That seems like we should probably give you two. Grateful for the chocolate chip cookies? Go ahead. I think we're going to give Lynn and Dale both $100,000 because he loves the chocolate chip. Maybe he'll love the $100,000, and maybe here you can give your brother $100,000 as well.
Yeah, there you
How about
go.
that? Whoops.
Watch this. Watch this happen. Watch it happen.
There we go. We've given her brother $100,000. So we're just the giving is crazy. I feel like Oprah sometimes on here back when she used to give stuff away. Ken, about yourself, what do you like to share?
Well, I'm grateful for all of you. It's good to see everybody again. Good to be in the same room with you all. Shake hands, give some hugs, say hi. I'm used to seeing you guys behind a computer screen, so this looks pretty good right now. So.
Well, what you didn't see is that Ken came here in his underwear. Forgot it wasn't on Zoom.
I did put pants on today. No, my gratitude goes to Zach, actually. He pushed me, he got me back into running. I ran a couple marathons about 15 years ago before I had kids and married and all that kind of good stuff, had a little more time. He's inspired me to get back out there and run. My legs are extremely sore right now, so if I fall down today, it's not that I'm nervous. I just literally can't feel my legs still. So, but no, gratitude goes to Zach. He pushed me all the way. We finished the race. We did a great job. We were well trained for a half a marathon. Zach forgot to tell me there was another half after the half. And so that was a little bit of a problem for me. But we finished, and Zach pretty much drugged me across the finish line. So my gratitude goes to Zach today. So, and all of you, of course. Right? So.
I like that. That's awesome. Thank you, Ken. That's awesome. So I want to say last Sunday between Ken, myself, and Zach, we ran 56 miles.
So you really ran 4 miles? If I'm doing the math correct, you ran 4 miles?
I ran up and down the bluff for an hour and 10 minutes.
I've never seen Chris run 4 miles in my life.
Well, it was close anyway. Zach, how about yourself?
I can echo that as well. Always grateful for family and the team here. You can see the emotions just watching the video, and it's truly special to go to work with everyone that you see here every single day. And grateful for Ken as well. I'm surprised he is grateful for me after spending 5 hours almost with me running. But it was great, and a quick little funny story. At about mile 14, we were starting to get a little tired, and Ken's like, man, all I need is like an Oreo or something. And even to the point where there were some bystanders, some kids sitting there, he's like, hey, you guys got Oreos? And they didn't have any food at all, which is a little rare, but at about mile 20, the first thing we see when we round the corner heading down Veterans Park in Milwaukee is a box of Oreos at this aid station. And I'm like, Ken, there's Oreos. He's like, oh my God. Goes up there and grabs them. And about 2 minutes later, as we're running down the hill, I'm like, how was that Oreo? He's like, it's the best thing I've ever had in my life. But extremely grateful for the experience, and was an amazing time.
Thank you. You too.
Awesome. Thank you. Well, I appreciate it. Thank you for the gratitude and sharing. I look forward to all the things we can be grateful for. The autumn is very reflective for me. And at the end of this, if you'd like, I actually wrote another poem about the autumn called The Giants, and I'll read about that. But what I want to do most importantly first is our team is ever expanding. And the key, we expand our team to serve you. And the people that we bring on have a rigorous process of getting on. Matter of fact, they have to meet everybody before they meet me. And then they have to meet me and meet everybody else again. Reason being is because I want them to understand working with us as a team, working with you as a team. So we're very, very careful about who we bring on and how we bring them on. So when you're looking at someone here, once they pass that test, I trust them. I would transfer that trust to you. So I give you that gift as well. But with I want to introduce 3 new team members from our team. Now, you have probably talked to or heard Angie before. So Angie, why don't you wave? You can pull down your mask, just don't breathe. Good. But this is Angie Zilka. She's come to us, and she's our client concierge. She's a financial, she basically helps us get everything done that we need to do that's super important. So when she comes in with great experience. Lisa knew her for years beforehand, so we had some references that came in. And wonderful thing about that, she's fit in just like a team member super quick. So she may have been here, 6 years or 6 months. It just seemed like she fit in immediately right away. So we appreciate that, Angie. So we can give a hand to bringing Angie on to join the family. So Jen Podolak, who I met actually as our golf pro had an event at our club, we met her at one of the holes. I'm like, oh my gosh, what do you do? And she'd mentioned, oh, I do marketing in this for, I think it was Kohler at the time. That's interesting. And I thought in my mind, wow, she's really good at what she does and how she presents this. That'd be interesting if someday we work together. Well, 2, 3, 4 years pass, and then I hear from Andy, oh, guess what? She's going to be leaving Kohler. So we reached out to Jenny, and what we do is found another member of our family. We'd found her well before. She just joined us, about a year ago this time, so you haven't seen her from COVID. But the reason you're seeing things like this, if you've seen the different cards in our newsletter and different ideas as well, she's really the captain of those. Our brand, how we look, she really is big on the planet, live it, give it idea as well. So if you look at anything that we're really creating, Ashley and her are a team as well, and Kristen, we look at this as this is just a fabulous team and family for us to create the ideas that we serve you with. So this is Jen Podolak. Now after this, I'm also going to introduce Ryan, but I want to have each one give you a 30-minute dissertation onto why they work here. But that'll be after the program this time. I figure we'll just save time. Ryan as well. Ryan Caroway comes to us. I met actually his parents-in-law first, but then I met Ryan as he was going to be hired at a different Raymond James office. So I wanted to talk to him and give him some advice. In the process, it became apparent that he probably should be a member of our team instead. So I carefully went through the process of saying, or are you going to work for Raymond James and go through this program, or would you like to work with a team that's established? And I think, how long did that take for you to decide?
I think I was already answering you before you finished the question.
He did, right. So he actually was a personal trainer, ran his own business in Appleton. So for anybody here from Appleton, and I don't think there is anybody here, he used to run a personal training business up in Neenah, Appleton as well. But he decided to sell that and move down here with the family and has become a wonderful member of our team as well. Learning the ropes, learning everything, getting we want to also pass both of his tests recently, which is outstanding. So we want to give him a hand for that. But thanks for joining the team. So as we continue to grow, and typically there's one person per event, but since we haven't had one in like 700 years, I had to introduce all three. So thank you. Thank you for joining, and thank you to the rest of our team. Really, our team has really been so supportive of them joining and really helping people meld in right away. So we appreciate that. Thank you. Hand for them as well, please. So this is how I look every day at the office. Isn't that better than a picture of somebody on a golf course? I was on a Zoom call and somebody had a picture of them on a golf course. I'm like, oh, that's great. That's what everybody's doing during Zoom. But what's new on my bookshelf? Anybody here read a book in the last year, year and a half, 2 years? Yeah? Good. That's good. Because the average person doesn't. Do you know that? The average person doesn't. But as you look here, these are books that we read. The Outward Mindset, we've talked about this one, is Arrows Out. It's a concept of, are you doing for others what you want to do? Because it makes you happier. It actually changes the world when you do stuff for others. If the arrows are pointing in, oftentimes it can be sadness, aloneness, solemnness, and a lot of loneliness, if you will. So anyway, it's an interesting concept, wonderful book. Love Your Enemies is a book I'm going to be doing a book club on starting November. It's a book that's kind of changed how we work together. Anybody have a member of their family that they disagree with a little bit? I got people at the table pointing at each other here. I don't mean to do that. Yeah, exactly. Right, exactly. I should have phrased the question a little differently there. So I know there's somebody in the family you don't get along with, right? Don't point. Actually, I feel like I should be throwing 100 grands out. Here you go. But as you go through, this book has been a life changer. Once in a while, there's books like that for me, and I want to share them with you. You don't have to read the whole book, but for those who want to go through the exercise with us, we're going to do a chapter or two a month. And I just want to say, how did that hit you? How about your experiences with that as well? Because this is one of the things I think we could probably use in our nation, most importantly in our families. And then all of us, I really want to do a deep dive into the history of the United States in 5 crashes. I love that people are like, oh, what? So this is the book I'm reading. I'm reading this book right now, 1906, by the way. From 1904 to 1905, the market was up 98%. The best 2-year stretch in the history of the market. Anybody here know that? Other than the people I told yesterday? No? 100% in 2 years. It's amazing, right? But the 1907 crash occurred. Why? Stay tuned. I'll tell you, I haven't read that yet. No, really, it's John Pierpont Morgan. There's a bunch of things, but it's showing us what has to be evident before a crash. What has to occur before manias happen. Now, here's one thing. If we think we're going to avoid crashes on a future basis, no. You know why? Everybody sitting in this room is human beings. And guess what? We are manias. We're maniacal. We have behavior that points us toward this. We tend to have a herd mentality. It's going up, hey, it's going to keep going up. But once you know that person from Kimberly-Clark, when I was there, left their job to go start day trading in 1998, which I sat there with some people in this room and heard their contemporaries saying, yeah, I'm leaving work before. I'm going to go day trade. And they did. And then they came back and looked for the job they had 2 years later when they lost everything they had. We're not at that point right now with all the money that's in cash, but this is the kind of stuff I want to study. What might it be, and what should we do? How many people have been through a crash here with us? Yep. You were in 1907? Wow. We have a 1907 participant. That might be another 100 grand. No, I'm just kidding you. But we have, right? And what did we do through it? Did we freak out and sell? No. You're all still here. You're all still retired that want to be. So we look at that as some great things we invest in for you. I'll keep going through a few of those as well. And this is big. Questions we're hearing from you. So what should I be doing with the new tax proposals? Who here heard that there's a House Ways and Means Committee and they've passed some proposals? You know what proposals mean? Nothing until they're enacted as law, right? But there's 10,000 people interpreting proposals that may or may not happen. We'll talk about a couple today. Should I be worried about inflation? Sure. Absolutely, especially if you're riding a bicycle. Should I invest in cryptocurrency? Do you guys want to invest in the Swiss franc? How about the Deutschmark? How about the Chinese yuan? They're all currencies. Cryptocurrency is simply an electric currency, which at some point will be a currency like a dollar. Okay? There was actually somebody who, out of their trunk, we heard before, was selling cryptocurrencies. They ended up being tokens from, like, I think one of those.
Chuck E. Cheese.
Chuck E. Cheese, yeah. He was selling Chuck E. Cheese tokens as cryptocurrency to people out of the back of his trunk. After he'd sold $278,000, officials caught him and arrested him. Yeah, but they put him in cyber jail. Exactly, whatever that is. What should I be doing with my cash? When should my kids come see you? This has been a big question for us. And can I afford to retire? So here's what's interesting. These two in our conversations have been correlating a lot more. When we met, it was typically 50 or over at the corporations we met. We're finding some of your kids, some of yours retiring between 40 and 51. And they're not leaving the workforce completely, but they're leaving what they were doing. They no longer want to do what they were doing because it was just overwhelming. They want to do something different. So they're coming to us, can I afford to transition to something else? So that's been a little bit newer, but I want to say that's some of the questions we're getting as well. So if you want to send people to us, it's why I built the team we have here. We want to be able to help you, your kids, grandkids, friends, people that you like. I want to stress that. I've had some people refer somebody to me, and then they'll go, oh, I'm sorry. Like, really? I would love to be happy that they're here with us in the room. And that if we go to an event, they're there with you. And you have a good time with them. I don't care if they have $10 million and they're miserable. They can be miserable with somebody else. I think Baird would love it. Baird's not bad, just who came to mind. But as we go through this, I just want to make sure I thank you as well for the introductions. We have the team for it. We have the team to help you and your family. And that's an important piece. Over time, we've grown for that, and we've seen this need. So we're going to keep listening. And I want to say, here's some of the questions we're seeing from you. Any other questions you'd like us to make sure we cover in here? Please. Yes, Keith.
Chris, did you hear about Paul Krugman's article on Monday about the $1 trillion platinum coin?
I really don't read. Sorry, Keith. I don't read it all. No, just kidding. Keith, I did not read Paul Krugman's article on the $1 trillion platinum coin.
Yeah, no, I was just curious if, because it was talking about as a means of counteracting if the debt ceiling is not raised.
Right. Yeah, maybe they'll issue a coin. Here's the case. I'm going to tell you this. So do you know anybody who's had a crazy idea? You? Okay, good. I appreciate it, because I too. If you want confirmation bias, the biggest confirmation ability, no matter what you're thinking, I think that pink elephants with orange noses and red tails might exist. You hop on the internet and somebody will show you, yeah, they're right here in Africa, right? So sometimes I look at all the articles that are out there. I think there's probably some reasonable idea. Paul Krugman put some big things out there from time to time as ideas to offset inflationary ideas or debt ceiling ideas. And sometimes they're interesting. Sometimes he's doing it to get an opinion. But I think if you look at cryptocurrencies, as you'll see, they'll become a part of our currency, a part of our economy. So I think as I see Paul Krugman, if I read it, I could give you more comment. But I do know what he writes. I do know what he writes. And he writes a lot of stuff like that as well, and some great criticism of different ideas. So I appreciate what he says. So I don't have a direct answer for you. So we have a market update here now as well. And I think Ken and Zach have just gone through the market update, so we'll skip that one. Joking. We're going to talk about asset class performance, sectors, rebalancing, setting aside income needs, continued volatility, upcoming stock buybacks, what to do if I invest, or what if I invest and then the market's correct. So Zach, can you handle all those right now? Boom.
Absolutely. We'll be here until about 5 o'clock today. That's no issue for anyone, right? But if you guys have been on the bi-weekly webinars, we've been trying to go through and share things that we feel you guys should know, and also to offer perspective to some things, because if you're watching the news, you're not supposed to be, remember? But if you are watching the news, we want to provide perspective of what different things mean. If the news is showing what markets are doing, we want to offer a little bit of perspective. So as far as asset classes and performances, I'm just going to kind of run through the major indexes and where they're currently at. The S&P 500, 500 of the biggest companies in the world for their market capitalization, 14.49%. You'll see a little later today that the long-term market average since about 1930 is around 10%. So higher than average for normal, and about 5% off of recent highs over the last month. So that's what we've been hearing a lot of recently. The Dow Jones Industrial Average comprises of 30 stocks, and it's price weighted, not the size of the company weighted, but price weighted, which is a key difference. But that's 11.10. What does the news love to show us when the market is down for a day? They love to show us the Dow because it's a bigger point percentage, right? Or it's bigger points, not percentage. So they say, market's down 300 points today. That's less than 1% now, which is completely normal. So just be aware of that, and the points are going to continually be larger. The NASDAQ, which is 49% technology weighted, is 10.61%. The Russell 2000, which generally tracks small caps and mid caps, is 12.29% positive for the year, and kind of a breakout inside of there between growth and value. Growth on the small cap side is 2.11% on the year, but value is 23.54. So over the last 10, 12, 15 years, it was actually the complete opposite. So that's why we own both. So we never have to guess or assume which one is going to do better win. On the emerging market side, that one's lagged behind the most, which is currently down minus 4.39, which the biggest mistake that investors make at this point, and we'll show you in a chart after this, is, oh, S&P's up almost 15%, emerging markets down 4.5%. I'm going to sell out of emerging markets and move all my money to what's doing well. Exact opposite of what we want to be as investors, right? And the third point on here, if we go back to the other side, is rebalancing. That's where rebalancing comes in, because if a rebalance happens for you guys on an annual basis, what would we be buying more of right now? Emerging markets, right? And example, as far as sectors go, in 2020, real estate was the worst performing sector. This year it was the best for most of the year. So any rebalance we did last year bought more of real estate, which then performed the best. So on the fixed income side of things, a lot of people ask just how bonds are doing, how yields are doing, if anyone has a lot of money in savings accounts or money market. Really curious of how to get better than 0.00 nothing right now. But yields are still extremely low. Mike was talking to some of our portfolio experts last quarter, and 84% of bonds were yielding less than 2%. So very hard to find yield right now. And a massive study that we did with rebalancing, depending on the time frame you look at, it adds up to 1% of return a year. The main purpose of rebalancing is to reduce risk, hopefully maximize return. If you looked at different time periods, it could be significantly less. But generally, over the course of time, if you go through full market cycles, it could add up to 1% of return a year just from an annual rebalance once a year.
Sometimes it'd be nice if we could rebalance our lives, right? Talked to a lot of people working going, I'd like to rebalance this. I'm too much in work. But it would be a great thing as well. Great concept.
And when it comes to setting aside income needs, Ken?
Yeah, absolutely. So who here is retired? Quite a few, right? Who here needs income from time to time? Quite a few, right? One thing that's interesting is we can't take our IRA to the grocery store. So we need income. So what are we doing inside the portfolio? Exactly what Zach is talking about as far as rebalancing. Such a great time to rebalance right now, either now or when your review's coming up here. Well, we need income. We need income. What are we doing? We're selling some of our stocks actually and buying a little more of the bonds actually right now if we need income. So we have right around, given your scenario, right around 7 to 8 years of income for you set aside for the future, right? So when we talk about market downturns, we can endure quite a bit of pain together before we need to even go to the stock side of the portfolio because we have 7 to 8 years of income already set aside. We're also doing some short-term bonds in some of your portfolios as well, gearing up for even next year's income on the short side of the bond equation as well. So continued volatility. I'm at a soccer game and football games all the time. People come up to say, hey, Ken, what's going on with the markets? Is there going to be volatility? And we see this in the last couple weeks or so, right? We've seen a little bit of volatility. We haven't seen that in a long time, right? But we're in it for the long haul. This is a 30 to 40 to 50, maybe even 60-year retirement based on what Chris may talk about as far as Future Loop goes in the future here. So upcoming stock buybacks, that's already happening. Corporations are buying back stock left and right now. It's like the silent celebration that no one's really talking about. It's part of the reason why the markets are going up. Whenever a company takes the shares out of the public, there's less shares out there. That means that the prices are going up right now. Companies are doing that, and they've been doing it for a couple years now. So that we're going to probably see that to continue as well. So,
yeah, we just announced record buybacks. I think, as Ken was saying, record buybacks and record dividends ever in history. So, pretty good time as well.
The last question, what if I invest at the absolute worst time? It's a question that we hear every time markets reach a new high and then another high. One of Chris's mentors and teachers and someone that we look at as well is Nick Murray. And he came out with a massive study that the worst times to invest since the Great Depression was October of 2007. The market continued to draw down almost 53% all the way until March of 2009. Did not recover to that point until 2013. During that time, from 2013 to today, we had two 20% market corrections in both 2011, 2018, and then we all know last year with COVID as well, we had a 34% drawdown. As of the end of August, the average return over that time, 10%. The historical long-term average since about 1930.
That's
Incredible.
Where it says, don't just do something, sit there. Comes into effect. So as we look at this, it's very serious, right? The information we have here, you've all been through these corrections. You've been through what we're doing. You've been through the rebalances. I saw who was coming, and I say we don't need to go over a lot of the fundamentals of these. We just wanted to touch on it because some of these fundamentals are important to our long-term perspective. You all have become most of you have become great investors. I say that because in this room lies a lot of people who could come up and give some of this presentation, and on purpose. We've got these fundamentals covered. What I want to do now, though, is touch a little bit here on what it is we've been doing as far as portfolio due diligence and research. So I want to bring Mike back up and talk about it because we do a lot of this, and what I have had an error in the past is to not tell you the many, many different things. It's not just portfolio, it's other things as well. So Mike, why don't you share that with us?
Yeah, thank you, Chris. So something that we take a lot of pride in is the amount of time and effort that we put into researching the portfolio, seeing what's going on in the markets, and figuring out what the best course of action is for all of you. And by doing that, we try to host semi-annual meetings with all of our teams that are associated with these different mutual fund companies that we invest in and other opportunities. And Ryan and I kind of spearhead this and take it upon ourselves to have these calls and then bring that information back to Ken and Zach and Chris. And we make decisions on how to proceed as a team. And really using that team approach has really helped us in creating a system that helps make the best decisions for you. Another thing that we try to talk about in these meetings are current events in markets. I heard somebody make a comment about the debt ceiling being raised. Well, we heard about the debt ceiling. We hear about the government shutdown, and so the wheels are kind of turning. And what happens to the markets when these things come up? When the government shut down last time, what happened? And simply, there isn't a correlation to going up or down. It's just volatility. A little bit more volatility, and that comes from the smoke from news companies latching onto a subject, making a headline, getting those views. COVID isn't getting the clicks it used to. So government shutting down, let's put that up in lights, or raising the debt ceiling, or need to raise the debt ceiling, or it's going to be catastrophic. Well, the truth of the matter is, with both those events, that with the government shutdown, the stock market has not reacted in a way that is predictable. And with the debt ceiling needing to be raised, that also has not created a problem. Now, if the government does default on bonds, which is so extremely unlikely, then that will be something that will need to be addressed at that time. And you can rest assured that we will be in contact with the right people to make sure that we are making the right decisions for you in those moments. And that rolls right into our continued education and planning ideas. I mean, we have the ability, earlier I talked about how we invest back in you by attending these conferences, continuing to learn. Well, Ed Slott, one of the names that were on there, recently put on a HSA conversation where we were able to see a little bit more, pull back the curtain, if you will, about the HSA and how we can present that as a planning idea. Because truly, HSAs are retirement ideas. They're not just for healthcare. That is the primary purpose, and it creates reasons how you are able to be exempt from taxes for making some of those payments. But the idea of an HSA, after you turn the age of 65, it operates as an IRA. And that's something that a lot of people don't know or don't truly understand. And in that sense, you're able to take from your HSA without the penalty for not using it for a qualified expense. You just have to pay taxes on it like an IRA. So these are just ideas that are brought back to the forefront by us attending these conferences and doing these webinars on a regular basis.
Plus, every day on my email, I get probably 15 offers to be in special certain groups because of our level of attainment of different things. And I look at them, it'd be great, but we don't have 72 hours in a week to just watch these videos. So the nice thing, I can now disseminate these to Mike, Ryan, and somebody else on the team and say, hey, listen, I want to know from this, what is the main salient point? What can we use from this? 45 minutes, because in 45 minutes, there'll be one important thing, but there may only be one important thing. So we want to get through that. We want to ferret that out. And some of them are great. Sometimes JP Morgan or somebody will come up with 7. We'll go, oh, we got to go through this and use it. So it's been really helpful that way.
Absolutely. And, we've kind of had a down time. We had all of these meetings right before for Q2, which was in June. So since July, Ryan and I have only attended 41 webinars.
Only.
So yeah, we're looking forward to ramping up a little bit in October and probably topping that number all by itself.
Outstanding.
So we're going to continue to look at that, and yeah, that's the due diligence that we take a lot of pride in, like I said, and we want to continue to be completely transparent. So if anybody ever has questions about investments, please don't hesitate to ask.
And if they're really, really tough, ask Mike.
Yep.
Give me a call.
Ken no longer wants it. He'll pass it to Mike.
So
thank you, Michael. I appreciate it. That's awesome. So one thing we want to talk about, anybody here heard about the Pandora Papers? 1, 2 people have. So it's the biggest leak of information from an offshore source about people who might be corrupt. Guess who they found were corrupt? Political officials. And apparently Elton John. And maybe he's a political official as well. But you look at this, the top people in this, there was something like 1,000 billionaires in China they found as well. You start to look at these things, and there's corruptness in these countries that are emerging as well. Oh my gosh, there were in America too. But anyway, you've got these Pandora Papers, you've got different things. One of the biggest things everybody talks about to Ken and myself is there going to be a crash? Hey, the market's going to crash. You know what my answer is? Yes. That's my answer, yes. The difference between you and me is you don't know when. I know that I don't know when. So it's a great way to stop that conversation. That's a script for you. Hey, I think this market's going to crash. Yep. First I'll be like, really? Yep. You can say the difference between you and me based on your relationship with them, because that may sever the relationship a little bit. The difference between you and me is you think you know when. I know I don't. Anyway, use that script. But what I want to do even before we go with that, since we're talking about market corrections, is go through the market correction section.
Thank you, Chris. I don't have a great in-law joke yet. Someday I'll be blessed with that. That's normally Ken. We'll run through these, but it was so funny the first few years that we went through these and all the different meetings. I'm like, Chris, Ken, why do we always show the same slide and say this over and over again?
Exactly.
Because it's one of the most important things that we continually can show you and remind you about. So just running through, market corrections, they're swift and visceral. They come without warning. Their length of stay is unknown. They are not pleasant when they are around. They leave scars on those who react poorly. They are temporary and necessary. They are vital to the long-term return, and they are essential to the health of long-term bull markets. We won't go into all of the different planning details right now, but we have those at the end of the seminar, as well as we look forward to corrections because of the planning it creates. That's the difference.
I agree. Here's a good point, too. One key metric of emotional maturity is one's ability to withstand ambiguity. Think about that. Has the future of your life ever been uncertain? It's funny because people go, well, no, to that person who's very controlling, right? Yes, every future moment is uncertain. But if you look at that, our life is our ability to deal with it. We can either worry tremendously or stride confidently with some intention, right? And it's our choice. So corrections are very interesting, but what I want to hop into here is, you all have been in this bull market with me, say, for the last 12 years or so, correct? Well, guess what? The sport of calling a market bubble. I want to show you this. The catastrophist media since since January 11th, 2010. Title, U.S. stocks surge back towards bubble territory. This is in 2010. If you listened, you'd be sorry. May 3rd, 2011. Why this stock market looks like the tech bubble of 2000 all over again, from the Business Insider. I continue. 2012, Robert Shiller, another tech bubble. 2013, Nobel Prize winner warns of U.S. stock tech bubble. Apparently when you win a Nobel Prize, you can call corrections, right? It comes with clairvoyance. 2014, time to worry about stock market bubbles. 2015, fear grows over U.S. stock market bubble. 2016, uh-oh, is the stock market in a bubble again? Anyone want to fall over here? I'm going to keep reading them because it's fun. So, is the stock market in a bubble? Well, isn't that the same question they asked last year? 2018, disaster is inevitable when American stock market bubble bursts. 2019, 7 ways that 2019 mirrors the dot-com bubble. 2020, a stock market bubble is forming. April 13th, 2021, a growing number of investors believe the stock market is in a bubble. Whew. Anybody see that movie with John Travolta where the boy was in the bubble? I've seen it. This is crazy. But this is what your neighbors and friends who reacted poorly did. Just last year alone, we're up 85% since 18 months ago. Some of you had the desire to do something during that. By the way, for us, just continuing to be great investors, we made 85% from bottom to top. Those are the little things. Those are the cues. We study this because when you study enough of this, when we talk enough about it, you go, yeah, I got it. You can help your friends. Don't help too many friends because it's your friends who freak out that allow us to excel. Did you hear that? Did you hear what I said? We don't need to cure everyone. Because if we cure everyone, we don't get the corrections. At any rate, it's just something that was interesting when you can go back and look at this in perspective. These are reputable, well, semi-reputable news sources, but look what they've all called. So drawdown frequency. So here, you'll like this. Jeremy Grantham just last week was on television. He goes, hey, there's some big news. Market's in a bubble. And there is going to be a massive correction coming of 10%. He said that. Jeremy Grantham, GMO, big guy on TV. Well, wait a minute. Once per year we have a correction of 10% or more, so he's not saying anything other than the obvious. It's like, I think later on today it's going to get dark. So when you hear this stuff, you just got to be amazed. They're trying to sell media.
Yeah, this is a good one. This is kind of parlays into what Chris is talking about. This is called the annual end of the world. You've seen this one hundreds of times if you've been here. But really what it shows is this 10% correction is very, very, very normal, you guys. Very normal. We haven't seen it for a while. That's why it's going to feel a little bigger when it does happen. When we look back through history, 40, 50 years of history, the average intra-year drop basically from where we see the markets, it's around 15%. Almost 15%. You can't see this back here, but that's what the red dots mean. The green on the chart is like where the markets ended up for the year. The red dot is what happened throughout the year. And the average is around 15%. Now 15% on the Dow Jones today is around 5,000 points. 5,000 points. The media, like we're talking about, is going to have a field day with that one, right? Because that seems like a really, really, really big number. But so is the Dow Jones at 34,000, 35,000. That's a big number as well. So numbers get bigger as we get bigger, obviously, but that's the annual end of the world with that piece. The bumpy road. This is an interesting one. You can't see the slide at all. It's in some of our review packets that we go through with you. But what it's showing is like 94, 95 years worth of information. The average return of the market for the last 94 years has been 10%. But if you look at where the markets ended up during that year, it's only been 6 times. 6 times it's even come close to 2% of that 10% average. That's it. Otherwise it's been higher or it's been lower, but over a long period of time, we do get that good rate of return that we're looking for, and stocks are able to give that to us.
Yeah, Ken brought this up. This is a great thing for every person in your family to know before this is like a user's manual that you used to be required to get and read before you enter the stock market. This is what the ride looks like. Right? Oh, but the average just looks like this. This is amazing. We're putting a piece together to help every member of your family become great investors as a gift to you and them. This is one of them. So we're putting that together right now. It'll probably take us 6 years to put together. I'm kidding. It should be in the next 6 months. However, this is a great piece. Thanks, Ken. So in the book, The 5 Crashes, the interesting part about this is there's a lot of similarities to them. It's human nature in most cases. It's greed and fear. Gordon Gekko told most of us that greed is good. Anybody see the movie Wall Street years ago? That's what most people think about capitalism. You go back to 1907 and the panic that happened then, it was actually due to a few railroad barons. And it was a war between railroad barons, copper miners in Wyoming, and also Roosevelt. Roosevelt didn't like them. He said it was there was something about the malefactors of wealth. Just amazing statements he'd make, but he'd make them in public forums, and the market would drop. Eventually, it led to a panic. 1906, though, the market hit its peak. It hit 100. The Dow was at 100. Think about that. No dividends or anything else. Where's the Dow now? 35, 30, 400,000? Who knows, right? But that's up a factor of how much? 350? Just over that time, about 100 years. It's crazy. So anyway, as you go through here, as we remain human, I'll give you more about this. I'll study this and give you the brief version of it. But it's a great, great book. We read books like this, Panics and Manias, because this is the inflection point. 5 times in your entire lifetime you may need us. Only 5. Those 5 and the resulting concomitant return you'll get from it is going to be probably the value of what we do. I love going through corrections. Here, let me ask this question. What do corrections equal? Corrections equal what? Opportunity. It's exactly right, 100%. I'm more excited about corrections than I am bull markets because I'm here for you. We have something that you want. Advice during those tough times when everybody else is giving you opposite. So as we run through that, that's another part of it as well. Cryptocurrency. Ken's going to give you a deep dive into what it is and the $1 trillion coin.
Does anybody want to mine some Bitcoin? I don't even know what that means, actually. No, I'm just joking. But when you talk about crypto, it's everywhere. Everybody's talking about cryptocurrency. Maybe not so much right now because cryptocurrency kind of took it on the nose a little bit recently, right? You saw Bitcoin at 60,000 a coin. Now it's kind of inching back up to that 50,000 range right now. It's interesting though because you're starting to see and hear large corporations talking about how this might be an asset class at some point in time. We at Gentian Financial don't necessarily believe that right now, but we keep a keen eye on this, of course, right now. But you're talking about large companies that think that this could be an asset class like large cap growth, like companies that include Amazon, Microsoft, Netflix, Tesla. Tesla does own a lot of Bitcoin, right? They came out and bought a lot of it, right? So, but as an asset class, as a hedge against something else, we're not quite seeing that quite yet, but we always keep a keen eye on this as well. But imagine this. It's a currency. Chris kind of alluded to the Swiss franc, but imagine if I called you up and said, hey Steve, how you doing? Good. Hey, do you think we should, I think we want to speculate on the Swiss franc today. What do you think? You'd be like, this is what you're doing with my retirement portfolio? That sounds a little crazy, but that's really what it is at this point in time. Some of us own Coinbase accounts. Some of us own some crypto, and Robinhood is a very popular tool right now to own some of these. But again, it's just speculation. It's just trading going on. It has no bearing on really long-term results that we see so far. So I just wanted to bring that to your attention on crypto right now.
Yeah, and there's actually a lot of it's to do with human nature, just a different asset class. So panics and manias and bubbles happen when there's just a few. They are dramatic. But when they get wider and wider and wider, and there's more, it's diversified. There's not as big of an opportunity for it. Great point, Ken.
Absolutely. Investors' emotions. Let's talk about the emotions of all this. As I think we've talked about this. Are investors irrational? Nobody in this room is irrational. I know that for a fact.
Wait, are investors asleep?
But you look at the roller coaster that we go through in investing. You know, some of it's optimism. We might be seeing some of that right now. Some of it's skepticism right now. Is this too good to be true? I mean, everybody I talk to is saying, you know what, we're just kind of waiting for the markets to fall at this point in time. May happen. At some point in time it will, but we don't know when. But optimism, excitement, thrill, euphoria, that's the top end of it all. When it's going down, panic, capitulation, despondency, depression. I'm pretty sure this is like the emotions of a marathon runner.
I felt all of those.
Wait, what mile was this, Ken?
Yeah, panic was about
mile
15 when there was no Oreos. Depression was I realized that there was, maybe, like mile 22. That's when it kind of set in. Hope is when Zach grabbed my hand and said, let's cross the finish line. No, I'm just joking. But that's what we go through as an investor. We really go through this.
There's an Oreo moment?
That's euphoria.
Okay, sorry.
Yeah, mile 20 was when the Oreo came out. Right? But anyways, that's what we feel. If we can control our emotions, understand where we're at in the whole feelings of things, that's a good thing to understand as an investor. It's going to yield good results for you if we know where we're at with everything. I want to give you guys a big round of applause because investor return really equals investor behavior plus performance of investments. Mike and our team and all of us, we do a great job trying to understand what the best investments are for you to understand that you can have financial security for a long, long time, right? That's our goal with all of you. But investor behavior is a big part of that we try to control and try to educate you guys on as far as that. So I want to give yourselves a round of applause right now because a lot of you have stayed the course. And I'm so happy you did because now you're seeing the results of it all, right? There's a lot of times we hear on the phone, hey, should we change the strategy? Should we go a little more conservative? Got to remember, if we go more conservative, it has the potential to jeopardize our retirement. So investment risk equals retirement risk. So there's an optimal point that we found for all of you based on your risk tolerance to make sure your money grows as long as you do. A lot of you have had a great experience over a long period of time. You probably could tell the stories better than we can up here about what it's been like. But it's important that we do stay the course because your investment behavior is everything in all this. That's the one thing that, we can control the investments. We can't necessarily control how people feel all the time, right? But if we can educate, that's a big part of it all.
Yeah. So I think what Ken meant to say on that is retirement risk doesn't equal investment risk. So they're two different things. So you may take a lot less risk in your investments and make a much bigger risk for your retirement. So they correlate is a big part of it. So sometimes that's confusing. We talk a lot about that, though.
Sorry, I might be still delirious from running, but no, the lower the investment risk we go, like the more conservative we go, the higher our retirement risk goes. Correct. There's an opposite correlation there. The more aggressive we are, the lower it actually goes because we can make enough money to replenish what we're taking out as far as income goes in retirement.
Nailed it.
Thank you, Chris.
Awesome. Yeah, you bet. So you guys, this is one of those fun things. I'm just going to give you a summary quick of it. But when the market's been really good for 12 years, what do people do? They run for the exits. They buy bonds, right? That's what you should do. What should you do during that time? Be buying like crazy, right? Well, look at this. This yellow graph tells something really important. I don't know what it tells, but it looks good. If you go here, this is the S&P's return in yellow. This here is showing you U.S. equity outflows during this upturn. So look at this. These are outflows. People are getting out when things are good. They're going to get back in when they're at the top. Isn't that crazy? This is what people do. You know it. You've seen it before. But this is another factor. There's all sorts of charts showing this. It takes faith, patience, and discipline. It's not easy, but it is simple. Make sense? This is what we do. We offer you the faith, patience, and discipline. And more importantly, hope. I think I told you this in the latest I told you this on probably the latest program if you're on it on our web, on our bi-weekly briefing. I'm a hope dealer. I've been dealing hope for a super long time. It's still legal in our state to deal hope. Matter of fact, you don't have to go to Michigan or Illinois to get it. It's free, and I can't be arrested if they find it in my trunk, right? So I'm going to be a hope dealer for the rest of my life. Some of the planning and ideas in taxes. This is some of the stuff that's coming up right now. There's a lot going on when it comes to planning and taxes. This is how the IRS works. Anybody hear about the Ways and Means Committee that just met? They set a date, I think September 13th or September 16th. All of these regulations for capital gains apply as of this date. What are the regulations? Oh, we don't know yet. We're going to figure those out. But it applies as of this date. How's that? You guys ever had rules you had to follow that you didn't know were there yet? Yeah. Sometimes it's parenting, sometimes it's kids, right? But this is how the IRS works. So this is what's going on right now. They're going to figure them out, but they've set the date that it applies in some of these regulations. So it's absolutely crazy. But some of the proposed tax law changes, as we see here, an increase of top corporate individual tax rates, increase of capital gains, elimination of Roth conversions and backdoor Roth strategies. These are a lot of things that Ken and Zach have talked a lot about. So wait a minute, you can't do them if you have certain incomes? Yes. You're also going to find, too, income limits on Roth conversions of pre-tax funds. If you make over a certain amount, you can't convert. That's the way it was before as well. Contributions to mega Roth IRAs prohibited. What's a mega Roth IRA? Right now it's debated between $10 and $20 million. I don't know anybody who has one of those, but if you do, I suppose there should be some rules, right? And they're going to make you distribute what's above those mega Roth numbers. RMDs for mega Roth IRAs. If you have $20 million and it becomes $22 million in a year, you got to distribute the $2 million. That's going to hurt a lot of people. IRA investments are limited. You can no longer invest in crazy things. It's going to be much more strict, stocks, bonds, investments, not homes and other things as well, because that will eliminate the tax deferred aspect of your IRA. Then a reduction of estate and gift tax exemptions. You've heard a lot about this. There's probably not a lot of people here who've done grits, grats, gruts. There's a lot of different terms. But if you are in that category, I've gotten about 100 emails from attorneys saying, hey, come see our program on grits, grats, gruts, ILITs, and this and that. I'm going, oh, man. So it's something that a whole family has set their life on. Now the rules change. So they're all clamoring on what they should do. Should you do one ahead of time? Should you not? Let me jump into something that's going to be illegal soon. Who here wants to do that? Because they won't prosecute us, maybe. So anyway, there's a ton of this going on. We get this from Ed Slott as well. We go through these things. We pour through these on a pretty consistent basis. But we want to show you what the hysterical tax rates were.
Absolutely.
Oh, I mean historical.
And as you guys know, or maybe not know, historical tax rates are extremely low right now compared to history. If we look back at this chart, if we're looking at the individual top tax rate, in 1941 it was 94%. Today it's closer to 39.6%. On the capital gains side of things, we're pretty much consistent where it was, but in 1916 it was as high as 77%. And as Chris mentioned, a lot of the proposed changes are at certain income limits. Then your capital gains could be ordinary income, but again, they're all proposed as of right now. The extremely interesting thing is, if we bring some of these ideas to some accountants and CPAs, they think of it in an Excel spreadsheet and show a flat line for expected tax rates for the future, right? Where, okay, that Roth conversion may not make sense if taxes stay exactly the same. But if we look back at history, we're at a historically low tax rate right now. Would we rather get a little bit of money out now in case they raise them? Because more than likely, what do we think taxes are going to do moving forward with all the spending? So we try to bring those ideas and combine it with the expertise of the accountant as well. Here's a planning idea. What does make sense for the tax scenario?
Yeah, we've often talked about it. We think planning ideas can make a bigger difference than investment ideas over time, unless you bought Netflix 15 years ago. So the CARES Act, we got 2 acts. Ken's just going to, you guys know these, but Ken's giving a couple points that are still selling it today, because he talks to people, and we sit down, people go, I can do a QCD?
Yeah, we still get questions. So some of this you may know, but I do need to address it because I still get the questions from time to time. The CARES Act, it's kind of the act of the past right now. Really what it did was it eliminated the required minimum distributions from IRAs and stretch IRAs in 2020. I think a lot of us know that. In 2021, it's back in play. The required minimum distribution is back for IRAs, inherited IRAs, before 2020. So now we have a little bit of a caveat to all this. 2020 and beyond, we're going to talk about that. But RMDs for your IRAs are back in play for 2021. Now, the Secure Act has done a couple different things. Required minimum distributions. This is where we need to take money out of our traditional IRAs or traditional 401ks, basically. It used to be 70.5 in the year we turn 70.5. They've changed it now. It's age 72 in the year you turn 72. We can't wait till the next year, but then you got to take a double distribution. So it usually makes sense that in the year you turn 72, we need to take a distribution out. Qualified charitable distributions. Some of you know this in your sleep already. We've talked about it time and time again, but I still get questions, and it's okay. That's what we're here for. Qualified charitable distributions. This is simply a fact of taking money from your IRA and giving it to a charity of your choice, so that it's a non-taxable distribution to you. Otherwise, if you take possession of it, it becomes taxable to you. So it's a way to reduce your overall taxes. You have to be, this is key to this, you have to be literally 70.5 years of age to do something like this. Not in the year you turn 70.5. Why they make up these rules, I can't tell you, but you need to be 70.5 literally to make these distributions from your IRA to the charity.
Real quick, Ken, while you mentioned QCDs, we were asked the question of what kind of difference does that actually make on my taxes? And in the upcoming newsletter, we actually broke down the exact details with the QCD and the tax benefit, but I just wanted to share a high overview with you. So if we would take, in this example, and you'll again see it in the newsletter, so take a look out for it, but about $125,000 of income, married filing jointly. If you were to take that $15,000 that you're giving to church or different charities, took it out of your IRA and paid the church in cash, at the end of all these different assumptions, you would have had a net federal tax of $11,607 with the addition of a QCD where you give directly from the traditional IRA to the charity like Ken mentioned, was a tax benefit of $4,050. One QCD. What if we did 10 years worth?
It starts to add up, starts to become real money. I mean, $4,000 a year is a vacation, right? I mean, it's a family vacation if we think about what that really means for all of us, or something else you want to do with your money. The Secure Act also changed the stretch IRAs. Some of you have inherited IRAs before 2020. Those are still subject to the required minimum distributions every single year, okay? If you inherited an IRA in 2020 or beyond, in this year, right, or last year, we have a 10-year rule now. We don't need to take a distribution in the first 10 years, but at the end of the 10th year, the account must be distributed. So what are some ideas here? Traditional IRAs, taxable coming out. We need to understand how much we should take out each and every year if that's your scenario. Roth IRAs, there's no tax coming out. We might as well let those, I'll call it bake or marinate for the next 10 years and get it as big as possible so we can defer everything to the future, basically. And then take it out in the 10th year, there won't be any taxes as the law stands today. But as you can see, the IRS is coming up with some interesting ways to try to look at Roth IRAs in a little different way. So again, that's the stretch IRA with a 10-year rule, 2020 and beyond. We're tracking it for you. If you have one, we understand it. We have it labeled for you guys. We're tracking it for you.
Thank you, Ken.
Absolutely. Here's another good one. Again, I think most of us are beyond this stage right here as far as where we're at with our planning goes. But when your children are coming to see us, this is what we're hearing. We want to transition or we want to retire a little earlier. This idea of working till 65, 66, 67 is almost a thing of the past. I feel like it's a new fad of wanting to retire earlier, okay? Why is this stuff important? Because if we want to retire earlier, we need access to money from our accounts. And certain accounts have different age requirements. So the age 55 penalty, basically what we're talking about is how do we avoid the 10% IRS penalty? That's what we're talking about in this slide right now. How do we avoid that? There's two ways. I'm going to jump to the second one because it's easier to go backwards here. In an IRA, if you're 59 and a half and you take a distribution, you avoid the 10% early withdrawal penalty. You have to wait till you're 59 and a half with a traditional IRA, okay? Now, if you want to retire earlier and you want access to funds, there's the age 55 and older rule, which applies to like 401k plans at work. So if you retire in the year that you're 55, you can access your 401k money, without accessing the, without having the 10% early withdrawal penalty. So there are ways to get at money before 59 and a half. So these milestones are very, very important for someone who's looking to transition a little earlier, okay? Now we've guided people to keep money in their 401ks. What advisor does that? Most advisors want to roll the money into the IRA, right? We say, look, from a planning standpoint, let's keep some of the money back so we have access to money. It's so very important. Age 70 and a half for QCDs, I already touched on it. You literally need to be 70 and a half, okay? Age 72 for RMDs, already touched on it. You guys know the drill. You could probably come up here and you give the presentation better than I can.
Thank you, Ken. Appreciate it. So some of the different planning opportunities we've talked about: rebalancing when the market's correct, tax harvesting, Roth conversions, and again, these are unique to each of you, so we're not going to go over them in any detail. Charitable gifting, as Zach and Ken were talking about as well. Qualified charitable distribution, as Ken brought up. And life insurance planning. That's been a lot of questions we've had lately. So future loops. Here's the thing I want to say. About 6 years ago at Abundance 360, Peter Diamandis was at dinner with Elon Musk and also with Eric Schmidt, the head of Google. All Eric Schmidt said the whole dinner, he didn't talk to anyone. He just said, robots are coming. Robots are, when anybody said anything, that's all he would say the whole time. Because they invested in 6 robotic companies that year, and they're bringing them out. There's a brand new one coming out from Amazon, as you'll see here. It's going to be called, anybody remember from the Jetsons what the dog was called? Astro. But as you go through about this, robots are coming. Here's what's important. Anybody here go to a restaurant where they have not been able to get service because of a lack of what? Help people, right. Pizza HQ. So essentially, a company is coming up with an idea for 100% personless restaurant and delivery to you. Why? Because they can't find the people. If they can't find the people, robots are coming. Anybody been to a McDonald's here? It's okay if you admit it. The people up front aren't there in many cases anymore, right? What do? Kiosk. Same thing at Panera. So we're finding different ways, but you'll find this. If they can't find the people, they will find the artificial intelligence and robots. So it is coming. Has anybody been to Hassless Mattress? You guys heard of that? All the ads right there? Have you ever been to one? So this is like, I think this is like a real life example of what's happening. Hassless Mattress. It's a store you go into. There's no one in there. It's all mattresses. You can jump on the beds. No one's going to yell at you, right? You can sleep on them, but no one's in there. You can lay on, you can test them out. And if you like one, you go up to the kiosk, pretty much like at McDonald's, what Chris is talking about, and you say, I want the Sealy Posturepedic number 4. Bink, you pay for it. It shows up at your house. 2 days later, you have a mattress, and you haven't talked to anybody. And that's happening right now. It's called Hassless Mattress. There's one in Mequon. I think there's 4 or 5 locations throughout there. It's called Hassless Mattress. It's starting to happen. That store has been around for 2 or 3 years now, maybe 4 years now. So yes. It's coming. It is coming. Another one, too, is telemedicine. So this little robot right here can hook up to your doctor, follow you into a room when you're feeling sick, and hook up a telemedicine appointment to go, yeah, I think you've got a bad cold, or you should come to the ICU, or you should do this, or just that. So you're finding this one can actually, you can't quite see it here, but it will actually put up a probe. So if you wonder, did I leave? Anybody here ever ask their spouse, did you leave on the kitchen stove? This thing has a camera that can go in there and check it out and see. My question is, can it turn the damn thing off? I can see it's on, now what, right? Send the neighbor over to get it done. But this is coming. Telemedicine combining with these is amazing. Bioartificial kidney. Anybody here know anybody who's had problems with an organ? Kidney, heart, lungs, liver, right? A lot of us have. They've just come out with the first bioartificial kidney that actually works, and it works well. How about if they have an artificial pancreas for people who are diabetic? These things are coming, and they're coming sooner than you think. When it comes to Future Loop, these are the discoveries that the most intelligent people out there, oh, guess what? Not just the most intelligent people, the most intelligent artificial intelligence is working on. Did you hear what I said? Outpacing humans, working 24/7 without needing workers' comp. Robots with artificial intelligence will replace some humans in categories. It's going to be displacement, just like we were in the farm fields in the 1900s, right? So we can thank John Deere for misplacing all the farmers, right? But anyway, Tesla, full driverless is coming in the next week. Full driverless to those qualified drivers in a Tesla means no hands. It drives. My question is, where do you sit? Do you sit in the passenger seat? You ever got in the back seat of your car? Man, I've never sat here before. Do you do that with a Tesla now? I don't know, but this is coming, right? There's a couple things as well. So these are important future loop. There's more and more. I can give you 1,000 of these ideas. I see them every day. I see about 12 every single day. And these things is why I'm a hope dealer. I want to deal hope to you because there's a lot of great things coming. But I also want to let you also know on the other side of the equation from hope. Now, artificial intelligence can solve most of the world's problems and create problems we've never expected. We've got to watch out for that. So we'll bring both sides of the equation to you when it comes to those as well. Want to go through the thing, we covered a lot of stuff today in the update, but one thing I want to do, I read a whole bunch of stuff since we've talked. I want to give you a couple different ideas here that goes from it. For instance, a couple things. Anybody here heard of quantum computing? Quantum computing, yeah. So I met Chad Rigetti from Rigetti Systems 9 years ago. Chad Rigetti has quantum computing that allows basically take a computer we have and it can do 1,000 times what that computer does or more. They don't even know what it does. Now quantum chips are creating quantum computers themselves that are faster than themselves. Eventually maybe they'll turn back time, right? But as you do this, why is that important? But they believe that quantum computers just being introduced to companies will create about $13 to $18 trillion in market cap over the next 25 years. Now the whole world's market cap is 97 trillion. So it might be 15 to 20% of the market just by having these computers available. This is a massive megatrend that's occurring very slowly right now, accelerating in the next 10 years, and really getting its domination by 2050. You might say, I'm not here in 2050. These machines are going to try to help keep us alive healthily until 2050 and beyond. So these things I want to give to you because these are concepts you don't hear every day. You may hear them from us, but you don't hear them every day. A couple other ideas as well. So if you go back over the last 50 years, 50 years ago, 50% of the world was in abject poverty. Today, guess what it is? 9%. I've talked to this about Hans Rosling books before, right? They believe in the next 20 years we might completely eradicate both illiteracy and abject poverty. There's a lot of hope that's coming from this. Corporations, savings, wealthy people who've saved money do a lot of great in the world. And that's what's happening. The only thing in the future they believe will limit what our family and we can do is our own hope, intention, and mindset. So you can either fight it, you can accept it. Do you remember what I said about ambiguity? Our emotional maturity is based on how we handle ambiguity. You've also heard the words before from us that the world is extremely volatile. Anybody know the word that we talk about it? It's a what world? Rhymes with uka. VUCA, thank you. Starts with a V. If you said that and I didn't see you, somebody will throw you a candy bar to ruin your health. So there's another couple things as well. Anybody here heard of what's been happening in China? There's a rapid deprogramming and a wish to go back to CPP. They're hitting a lot of their companies with a lot of regulations that says, listen, if you're not doing the right stuff that we think, that our chairman believes, there's now 18 schools that are teaching the thoughts of the president. They're saying if your policies don't get in line with what the president says. So it's going very much back into what's called communism and socialism after a brief period of time, 20 or 30 years of democracy. China is known for this. So people wonder, why is China having such a rough time? China is a dominant world power, but they are hamstringing themselves again because other countries don't want to deal with the bully that's doing that. So as we look at these in your policy as well. So we do a lot of research on these trends, these big mega trends as well, metatrends, megatrends, all these, because these will affect where you and your family should invest in the long term. They'll affect our returns. Medicine and biochemistry and also the way they can deliver them and material sciences are coming together to cure diseases we didn't know we could. We're growing cartilage from stem cells. So if you've got a bad knee or something, you may not need surgery. These things are happening. Now, people might say, is it tomorrow? I can't tell you tomorrow. Our FDA may not approve it for 3 to 5 years, but these are coming. These are things we get from the technologies you see. So the principles, the things we're talking about, investments and all, these are an important part of what we're doing for retirement, but the hope, the things that you guys will be able to do and your families will be able to do, you want to prepare for this. You want to have these discussions. What might we do when we have to hide from a higher intelligence that's not human? Just a couple of movies about that, right? Where do we want to homestead if it's 140 degrees in Arizona? Lake Michigan at 85 degrees is pretty comfortable. So we've had some conversations like this with families, things you don't normally think of. That's our job to bring up perspective to you, for you to attack these, to take a look at them. to look at health today. What might I do with this? Maybe look at health a different way. So these are what we do. These are why we do them. There's a whole lot more. I won't. I think I've gone over my 12:30, didn't I, Peter? Yeah. Yeah. But this is extremely important. So what I want to do for you is we have talked a lot about the planet, live it, give it. We've talked today a lot about the planet. The live it we talk about in our webinars quite a bit. The give it is who you give it away to. There's also a fourth one I'm including. It's the inherit it. The baby boomers are going to pass $63 trillion to their kids, Generation X, in some form or not. Most aren't prepared for it. Most of your friends have a guy who does investments for them, or a girl who does investments for them. They don't have a retirement planner. They don't do what we're talking about here, what you see. So this world is, I actually know of people who have inherited money and done something completely different. So the keys as you go through here, we want to help you with through all these different stages. As you saw in the slides, Peter did this great little thing. He put plan it, live it, or give it on each little slide. Anybody here catch that? Yes, we had 2 people who are our team members did. We didn't tell them about it, though. No, we didn't. We didn't tell anybody. We just wanted to see if anybody caught that, because a lot of what we do does follow these lines. You guys may be most interested in one or another, but on the live it side of the equation, we've had a lot of you looking at the health side of the equation. Michelle Mudge Morris is great. She's awesome. She's a great resource. I know all of you give as well excessively. I appreciate that. It was something that they showed, and it's just our passion about giving as well. Well, thank you. So in giving, in the spirit of giving, the team has made, and they've done a great job here, Rice Krispie treats for you. Some of them with green food coloring, I see. No, I'm just kidding. But these are custom made for you, so you can actually pick those up as we give those to you on the way out. But we appreciate what you do with, for, together with us. We appreciate you individually. Thank you. Thank you.